Yes, so the second requirement, what you have got is your ethical requirement. Now, what is ethics? Doing right. Now, what is right? What is wrong? That is a matter of belief. Okay. Now, who will bring this belief? Like, for example, in our house, what is right? What is wrong? What we should do? What we should eat? What we should wear? Who is going to tell us? We say, for example, we have got some, say, some spiritual book or something. Okay, it will give some theories. It says, look, this is correct, this is not correct. So, who is going to tell us that which is correct? What a chartered accountant should do? What they should not do? For us, the Bible or Bhagavad Gita or Quran is the professional ethics book. It's called a code of ethics. So this book is written in 1963, and this is your subject matter of chapter number 19. So firm should establish the policies to see to it that the firm comply with the ethical requirements also. First thing, firm is very clear about the quality, but firm should comply with the your ethical requirements also, no? So who is going to suggest those ethical requirements? The code of ethics of ICA is going to tell, which is your integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. There are 5 fundamental principles plus independence. So there are 6, I can say. Okay, so these are all your qualities. This is something which can be seen. This is what you have inside. This is what you can show outside. You may be from inside also, you may be independent, but it's very important you have to show to the outsiders that you are independent. Now, how the fundamental principles should be emphasized? Okay, please mark this important. You can mark this particular, because see, what I have observed, whenever the ICA gives some content in the form of a picture, this particular portion has got a very high chance of appearing in the examination. Has it come already? No. Okay. So, how do you ensure the fundamental principle? First thing, actions of the leadership of the firm. Firm should follow it. Okay. Then only the employee will follow. Bring that awareness, monitor them, and process of dealing with the non-compliance. Is it not the same thing we are doing at home also? See, we have got elders. First, they follow something. Like my daughter, sometimes she questions me. I will tell her something. She's telling, are you doing it? Obviously, we have to face such question. We cannot say, like we say, don't watch, don't see mobile. Then she's asking me, why you're seeing? Now, should I explain? Will she understand that? Look, Baba, I'm employed. I'm my whatever the education is done now. I'm earning, so I've got spare time. She doesn't understand that concept. So first, you actions of the leadership should emphasize what should be done, what should not be done. Second, I should bring an awareness and training. Then I have to monitor them, because without bringing that awareness, first I should do it. Second, I should tell. I should monitor, and the moment if they don't do, I should have a punishment. And I have got an authority to punish if I have done that. I have told, because see, if I have not have communicated, my daughter will always tell, no, I don't know who told me. How can I punish her? So before you monitor, you should tell, then the monitor, and then bring the process forward. This is how you emphasize the fundamental principle. And now comes the independence. I told you, always when you talk about the ethical requirements, there is 5 ethical fundamental principles plus independence. And independence is the founding requirement. What is independence? Being free of bias and influence. You take your own decision. Very difficult, student. Okay, be independent. But your independence brings a lot of trust. Now, let us look from the organizational. I told you, no? Organizational and operational. As part of an organization, like how the independence should, like how these ethical requirements should comply, what the firm should do. The firm should establish policies and procedures. Okay, friends, and initial, see, maybe first chapter will go a bit slow, okay, like this. But everything we cannot go in such a speed, with this speed we cannot go. See, once this entire study material, this thing concept sits in your brain, you see the later part will be much faster. You only will tell, sir, you please proceed further. And somewhere unnecessary noise has been created in some lectures, some places. we will skip that content. Unnecessary thing we will not try to feed our brain. Which is required, which is relevant only will feed. The firm should establish policies that a firm personnel, including expert and the network firms. That means, see, it is not that you are independent, your people are independent. The expert what you hire and the network firms also should be independent. They should also be abide by the code. And what that policy and procedure should do, first, communicate independence requirement. Very importantly, you have to tell about the independence requirement, identify the circumstances and relationships. What is circumstances? Like giving gift, familiarity threat. Okay, firm should have the quality control to figure out such things. See, in our company, in Vedanta, we had a policy student. First of all, because when I was in commercial department, see, I know different vendor approaches us in a different way, because they will give us different type of things to get the order. Okay, favors. Now, our company is very clear. They have got something called a gift policy. And as per that policy, any person in the company, not from commercial department, should not accept any gift from the vendor except one thing. What is that? It's, yeah, obviously it's the courtesy, Baba. They have got this Lakshmi Puja, shop festival, shop puja and all. When they bring, no, our company has brought a policy, nothing to accept from you. You should not drive them. It's just a courtesy. They say, yes, only one thing you can accept, that's sweet, but there is one condition. Whatever sweets you accept from your company's clients, Vedanta client, that sweet has to be distributed in the office only. Don't take home. See, this is leadership. Huh? This is called a tone. If not there, then you start taking favors. You start giving favors. So, what firm policy should do? Identify and evaluate the circumstances like this. What can threaten the independence? Like gift can threaten the independence. Relationship, like the client is giving non-audit work also, because he can bribe you through non-audit work. So, relationships, circumstances can create some threat to independence. You have to identify and then take appropriate action. What type of action? You can take one among the three. First, you eliminate those threats. First thing, because always we say, no, prevention is better than cure. First, you eliminate. If elimination is not possible, at least you reduce. How? By putting some control. If that also not possible, then you please withdraw from the engagement. So, this is what your standards on quality control says about independence. First of all, you need to have established the quality control procedures, and that quality control procedure should communicate independence, identify the threat, take appropriate action. Action can have three. Now, how you do it? Okay, first of all, there should be exist a mechanism in which engagement partners provide with the relevant information, because see, engagement partners are the eyes of the organization, because they are dealing with the client, like managers, we can say. So manager, because we hire responsible people as managers there, they should be observing what is happening in the organization. They should report to the HR. Okay, about the client engagement personal policy. All breaches of independence should be notified to the firm for appropriate action. And at least annually, you have to obtain a written confirmation of compliance with the policies and procedure on it. That means everybody should give in writing, look, whatever you have communicated to us, okay, whatever you have communicated to us, at the end of the year, we have to give a confirmation that, yes, we have complied with it. There is nothing like we have not complied. See, we have given in writing, that means we are serious. Yes, now there is one important element. I think this also has come for the examination, that is called a familiarity threat. Okay, so what is this familiarity threat? So SQC1 gives some special importance to familiarity. Familiarity means somebody is becoming very familiar with the client. So what happened? You become very sympathetic. Anyhow, in the last chapter we will study. Using same senior people on the assurance engagement for a very long period of time may impair the quality of performance, because what happens when you become very sympathetic, you say, you feel that, okay, you know that you already deal with them, you feel a bit shy to tell, to counter them. Therefore, what firms should do? They should establish criteria of a safeguard. How? One, that what type of criteria, like should I rotate every 3 years or every 4 years, or which type of person should be given to whom, that you decide. They say that in determining the appropriate criteria, you should consider the nature of the engagement, okay, because involving a matter of public interest, that means public company audits, okay, particularly public company audits. See, in private company, what happens, your interest is very limited there, so you can rotate say partner for 5 years, but a public company maybe every 3 years you may have to rotate. Say, just an example, this is what a firm may decide, and depending upon the length of the service of the senior person. So just for the sake of rotation, you cannot compromise with the quality also, because you need the people with the appropriate expertise. So they say that you consider how to rotate them, how to address the familiarity threat. They firm has to think about it. What type of safeguard can they can give? They can have a rotation of the senior people, having engagement quality control review. That means you are not able to rotate because there is only one senior people who can handle the treasury audit. No problem. You get quality control. No, let their work, let it be reviewed by somebody else. And familiarity threat is particularly relevant in the context of financial statement audit of a listed entities. So for audits, for this audit, that means in case of listed entity audit, why? Because there is a lot of public interest is involved in the listed entity audit. So SQC1 says that one partner should not be a partner for more than 7 years, unless you are conducted by a sole. Anyhow, today's day, this is not applicable for a sole trading concern, because after Companies Act 2013, you are any appoint. See, before 2013 Companies Act, SQC was there. Okay, so this familiarity threat was addressed by SQC, but not by Companies Act, because in 1956 Companies Act, there was no mandatory rotation of the auditors. So one person could have been in auditor of a company for 40-50 years. So much familiarity. So now what they have brought, you also aware that any firm or any individual can be in audit only for 5 years, but if you are a firm, you will have additional 5 years, one more 5 years. So for an individual, this never becomes applicable, because after 5 years they have to mandatorily take one cooling period. But if you are a firm, you can get another extension, but the practice, that engagement partner, the signing partner, should not continue more than 7 years. Again, in the Companies Act also, there is a provision that the shareholders also can speak about the rotation and all. They can ask for a joint audits if they want to address this familiarity threat. However, to ensure the quality control exists in such firms and appropriate reports are issued, there is the process of mandatory peer review of such firms. Okay, so that's why institute is carrying out the peer reviews. Okay, so now let us see one examination question of May 25, which has asked about the ethical requirement. Now, XYZ Associates is an audit firm giving service to various types of the clients. Okay, taxation, accounting, consultancy, fine, let it give. Very good, nice to know. It has been doing statutory auditor of B Limited, one of the listed entity. Always be careful the word you see listed, because so many compliances are required. Since last 7 years. Okay, no problem. They didn't tell you from where, when, but 7 years they have been doing. X has been the engagement partner since the beginning and has got a complete idea about the strength and weakness, internal controls of the firm. Okay, he's a very good experienced partner. He maintains a very good relationship with the management and TCWG. Every audit is completed in a cordial and healthy manner. And during the current year, that means this is the 8th year probably, the quality control reviewer, okay, because they must have appointed one quality control reviewer now. Why? Because they cannot let go this audit partner into some other engagement, because this is the one who knows everything about the company. Your audit will be very faster. If you bring some other partner there, audit will take time, because that person has to learn now. Learning curve comes into picture. So probably they must have gone for a quality control. Now, quality control reviewer insisted to change the engagement partner, saying that continuation of the same partner creates an audit risk and threat to the organization, and advises to review the firm's policy and procedure in relation to the engagement partner. Yes, his advice was very correct, because SQC1 mandatorily says for a listed entity, one person cannot be an engagement partner for more than 7 years. So what the EQCR told was correct. The management of the company does not wish to change the engagement partner. Where management, a firm should decide, no. How management of the company says that send me this engagement partner only. How do you view the above situation from the viewpoint of quality control system? See, keyword. From this word, you understand that they are talking about your chapter number 1, quality control system in the audit firm. In terms of SQC1, okay, they only told you, guide establishing the policies and procedures in respect of the engagement part. Okay. Now, How you evaluate? Now you need to write here, because this is, see, now they are talking about rotation and all here. So this is from the ethical point of view. So you say quality control of the firm. Okay, you can write here. You need not write also. Lay specific emphasis for the familiarity threat. Yes, this is the keyword for you. This has to come because they are talking about the familiarity. So you write all the theory here, familiarity related theory. Okay, you can write all this theory because you figured out that they are talking about the familiarity theory. So nature of the engagement you decide, service of the engagement, it's relevant in the context of public entity. Okay, you do the rotation, you have the sole proprietor, whatever theory you write. In the given case, this is not relevant, nothing, it is not going to fetch you any mark, 0 marks to write the story. Instead of you write in the form of a crisp summary. What is the issue here? The issue is one partner is the 7 years and he wanted to continue, and excuse reviewer is commenting. You write in one or two lines. So you cannot have more than 7 years. Yes, the firm should establish the procedure requiring the identify the role and engagement partners are communicated to the key members. Engagement partner has the appropriate authority. Okay, so what they are trying to tell here, see, there are two elements they are mixing. See, if you have got an advice here to change the engagement partner, but if you change the engagement partner, new engagement partner will come into picture. Again, go back to the same. You need to have the policy to identify and communicate. Delegation should be with the appropriate capability, and your role has to be very clearly defined. Okay, so you have got a two requirement. So how answer you need to write, students? See, again, you could have skipped this point, no problem, I feel, but primarily you have to write about your safeguards for the familiarity threat, because that's the primary issue. Guide the firm in establishing policies and procedure for an engagement partner. Okay, second part of the question you have to write here, because the first part of the question is familiarity threat. So what to do for the familiarity threat? You have to rotate only because it is mandatory. There is no choice, no question of continuing. Second, if you bring one new engagement partner, then they ask you what to do now. For this, again, you have to go back for the previous one. So if you are bringing, you have to identify the role of an engagement partner. Okay, they have to delegate with the appropriate capability and competency, and they should be clearly defined and communicated to the partner. So this is all about your second requirement, students. So the next requirements we can check in the next class. I hope it's fine.